Now, in the rest of the world, yeah, you're seeing lines all over the place. I mean, how is it that other than possibly the government telling them don't sell any silver, we want to portray a shortage, but I don't think that's the case. I think there's a real shortage. Actually, I know there's a real shortage. I mean, just look at what's going on in London. They're scrambling to be able to make deliveries. And it's just so important that people understand that if silver fails to deliver within 72 hours, you're not going to see markets open. Markets across the globe will not be able to open, in my opinion, within 72 hours.
In a recent interview, financial analyst Bill Holter issued a chilling warning about the growing strain in the global silver market. He explained that around the world, physical silver supplies are vanishing as delivery delays intensify, especially in London, where dealers are reportedly scrambling to meet obligations. This isn't a manufactured shortage. It's a fundamental breakdown in the ability to deliver metal when demanded. Holter cautions that if silver fails to deliver within just 72 hours, global markets could seize up entirely, halting trading and exposing the fragility of the entire financial system. In his view, this moment could mark the point where trust in paper markets finally collapses. Like, subscribe, and stay prepared for more real market insights. The truth they won't tell you on mainstream finance is what could protect your wealth tomorrow.
I was going to say we can start with silver because that's where the financial system very well could end, is with silver. There's obviously huge tightness all over the world in silver. India has doubled the amount of ounces. Forget about dollars or rupees. They've doubled the amount of ounces they're importing. The bullion dealers in China have basically closed down and they're not selling silver. The one bullion dealer that is selling silver is selling it at $128 an ounce. Silver's gone into backwardation where the futures or where cash is higher than the futures. The lease rates have exploded. It's primed and set up for failure to deliver. And I can't stress enough how important it is for silver not to fail to deliver, because if it does, it'll immediately spill over to gold. And you get action in gold like we're seeing in silver, that's the end of the system. We've been over $50 now for a week, maybe a week and a half. But the thing is, we've gone through 50 and the buying, if anything, has increased. And the risk here is that the chart goes parabolic. And the blood in the water that the sharks smell is that there's not enough supply, and that that they can break these markets. So when I say break the markets, you've got too many longs demanding delivery, and there's not enough supply. And we're going to find out that both gold and silver have been fractional reserve markets where they counted on only 1 or 2 or 3% of the longs standing for delivery. It's been a process. This has been taking place for 2 or 3 years now. If you look at both gold and silver on COMEX, the first notice day, and I'll just use a number of 100. Let's say there was 100 contracts standing for delivery. Prior to a couple of years ago, 3 years ago, what would happen is you have 100 contracts going into first notice day, and by the end of the month, it might be only half or 25%. In other words, the longs liquidated, took cash settlement, and walked away. But what's happening now is you get first notice day with that same 100 contracts, and by the end of the month, you might have 150, 200, 250 contracts standing for delivery. So no longer can you count on first notice day being a big number, and that's going to shrink from there. What's happening is buyers are set up, they're buying that month contract and saying, I want delivery. So they're piling up now. They're forming a line, if you will. It's a bank run into gold and silver, and that's what's going on with COMEX. You're not seeing retail in North America buy. You've not seen them buy for the last 9 months to a year. What I've seen as a precious metals broker, I've taken more sale orders in the last 12 months than I had combined in the previous 15 years. And what that tells me, and I've asked people, why are you selling? And 95 plus percent of the time, people say, I need the money. I got to pay taxes. I got to do this. I got to do that. The money is running out on the streets in the United States, the real economy. Another thing you can look at the traffic flow in Las Vegas. I mean, that's down something like 18%. What that shows you, those are real-time numbers showing you that the real economy is having a hard time. It's slowing down. You look at the official government numbers, they're all bullshit. They're telling you the economy's growing, inflation's coming down, everything's great. That's not the case. Now, in the rest of the world, yeah, you're seeing lines all over the place. I mean, how is it that other than possibly the government telling them don't sell any silver, we want to portray a shortage, but I don't think that's the case. I think there's a real shortage. Actually, I know there's a real shortage. I mean, just look at what's going on in London. They're scrambling to be able to make deliveries. And it's just so important that people understand that if silver fails to deliver within 72 hours, you're not going to see markets open. Markets across the globe will not be able to open, in my opinion, within 72 hours.
In a sobering look at today's market stress, Bill Holter explains that the breaking point for the global financial system could very well begin with silver. Across the world, supply is vanishing. India has doubled its silver imports, Chinese dealers have shut down sales entirely, and the few still offering metal are pricing it near $128 an ounce. Futures markets are now in backwardation, lease rates have exploded, and the scramble for physical delivery is intensifying. Holter warns that this is no ordinary market move. It's the early stage of a bank run into precious metals. As more buyers demand real metal instead of paper promises, the fractional reserve system that holds everything together begins to crack. Once silver fails to deliver, the system itself unravels. Let's get into the interview.
There's always a chance because you used the word for a while. For the end scenario, mathematically, no, they cannot fix this. They can't kick the can down the road. It's here, it's now. They're using their old tricks. They've raised margin on COMEX, which they've done many times before. They raised the margins and then forced the longs out because they can't afford the margin. They sell. I think the other day, in an hour's time, they sold something like 20,000 contracts. I mean, that's a huge amount of silver, and that silver does not exist. Remember, it's 5,000 ounces per contract, which I think that number worked out to be about 1 billion ounces were sold. The world only produces 800 million, 850 million ounces collectively in a year's time. Yeah, they absolutely could set the price. I mean, think about it. If China has an official policy, let's use that number of $128, that they'll sell you. If the price becomes $128 in China, why wouldn't someone buy off of COMEX or buy off of LBMA and turn around and sell it in China? I think that's not really the right way to look at it. It shouldn't be concerning. If you're sitting on silver and markets close, I can't think of another asset that I want to have in my hands other than a loaded gun and food. I cannot think of any monetary asset that I would want in my hands other than silver if markets close. And I'm not dissing gold. Gold is for, that's your store of wealth, but you're not going to trade in gold. I mean, you're going to have a hard time with silver eagles or 1 ounce bars or 1 ounce rounds, silver rounds. You're going to have a problem getting change back. I mean, if you deal with a farmer and let's say you want 2 dozen eggs, how are you can't get change back, but a silver dime will do it.
So why is
I do want to talk about that.
Go ahead.
Let me just mention this because I've got a bunch of emails in the last 3 or 4 days. The wholesalers have really pulled their bids back on junk silver. Junk silver now, if you're going to sell it, you're looking at $2.50 or $3 below spot. The only silver above spot in North America are silver eagles. I think they're about like $1 over spot. But people are concerned that, oh my gosh, I'm not going to be able to sell my silver. Well, understand that when all this silver that's been sold, all this junk silver, that's been melted down. And of course, they've not made any silver dimes or quarters since 1964. So there is no more supply, and the supply that has existed, any of that that's being sold, if you're selling it at $2 or $3 under spot, I guarantee you your wholesaler is sending that to a refinery and just picking up the 3, 4, 5% VIG and putting that in their pocket. Understand that can't go on forever. And also, there are refiners now saying they're not accepting any more silver because they've been inundated, and it's a physical process. It's not like pressing a computer key and boom, it's done. They actually have to refine it out. They've got to refine the 10% copper out if they want to get it to 99.99 pure. So while right now it feels a little bit, maybe did I make a mistake buying junk silver? No. If you wait a month, 2 months, 3 months, and this is assuming the system continues and does not collapse, in the future, in my opinion, junk silver is going to end up holding the highest premium of any form of silver in North America because the supply is being wiped out whenever anybody sells it. It's being destroyed. It's being melted down. Well, first off, that will bleed over to gold, and gold will also fail to deliver. Understand that gold and silver have been suppressed. The prices have been suppressed literally for 50 years, since 1976 when they started with futures and options on metals. Understand that gold has been suppressed because it is the direct competitor to fiat currencies, whether it's the dollar, the pound, the euro, the yen, whatever fiat currency, gold is the direct competitor. Now, if let's say 10 years ago, gold didn't stop, or 15 years ago, gold didn't stop at the $1,900, $2,000 level, and it blew through, and it got to 4,000 like we are now, and then it moved to 6, 7, 8,000, and started spiking. What that tells you is it's not gold going up; it's the fiat currency that's losing value. So that spills out, and it becomes a loss of confidence, and that would have and will prevent the U.S. from using a credit card. If they were to do that, I think it's obviously much more likely that they would do gold instead of silver, because they got to get, at these prices, they got to get 80 ounces of silver to equal every 1 ounce of gold that they confiscate. So yeah, it is a possibility. I think it's more likely that if there's going to be a confiscation, it'll be a nationalization of the mines. And the thought process has been that North America, the United States, and Canada are the safest mining districts in the world. And I don't necessarily agree with that. I think they may be the riskiest. They may have the most risk of anywhere in the world of being confiscated or nationalized.
In his closing remarks, Bill Holter delivers a stark reality check on where this crisis is headed. The system, he says, is mathematically beyond repair. The same old tricks like raising COMEX margins or dumping billions in paper ounces can't fix what's broken. When more silver is sold on paper in an hour than the world mines in a year, the illusion becomes impossible to maintain. Holter explains that even as junk silver trades below spot, it's being melted down, racing a form of money that can never be replaced. Refiners are overwhelmed, physical supplies drying up, and suppression in both gold and silver, ongoing since the 1970s, is reaching its limit. Once confidence snaps, no digital balance or fiat promise will hold value. Real wealth will return to the tangible: silver, gold, food, and what's in hand. The rest, he warns, is paper waiting to burn. Like, share, and subscribe for more hard truths about the endgame taking shape in real time.